Welcome once again to Clear Skies Retirement with Jay Kirkwood at Secure Financial Management. Coming up on this show in the next half hour, we're going to take a look at 401ks for just a second here, and an option that a lot of people are asking about that you might want to know about that we'll dive into. A little bit about the Fed. We hear about the Fed all the time. The Fed, the Fed, the Fed. Is the Fed going to do a good job for us this year, or are they actually going to get in the way of the stock market doing a good job this year? And we got a couple of guys from Shark Tank. We're going to hear from Mark Cuban and we're going to hear from Kevin O'Leary. They've got some advice on retirement, and one of them says the stock market is for suckers. Okay, that should be interesting. Jay, how are you doing today?
I'm doing great, Randy. I get to be here talking with you about finances. What could be better?
There you go. You live this stuff. You know, the rest of us are a little bit afraid of this stuff sometimes because it's an area that none of us have really lived our lives in. We save money. We do the best we possibly can, but then it comes time to use that money. We walk away from an employer, and now all of a sudden we are the CEO of our money. And
that's right.
We got to get a little help. I need a board of directors, Jay. I need you on my board of directors. That's what you got to be for.
You need a top-notch CEO is what you need.
There it is. Yeah.
Yeah.
You be CEO of your money, but all good CEOs have a real good board of directors, and I think that this is what we want people to do, is to make sure they get the right help with their retirement. So we've been watching that market. It's been kind of back and forth, up and down. There's a lot that's going on right now, and we hear about, as I mentioned, Jay, the Fed, the Fed, the Fed. It was pretty crazy last year. This year, they've been a little more quiet. We wonder what they're going to do. Every now and then we'll get an economist, and this guy's name is Mohamed El-Erian. He is on TV all the time. He was talking to Bloomberg, and he believes that the Fed has messed this thing up, and he believes they are not a part of the solution. They are really a part of the problem.
It is a ridiculous sequence that we've had. In July, there's no need for a cut. In September, there's need for a jumbo cut of 50 basis points. Then we come to the next two, and we are recalibrating, meaning we're getting down to the 25, regular 25. Now suddenly, there's a huge discussion. Are we skipping? Are we pausing? There is no meaningful forward policy guidance coming from this Fed. So look for the Fed policy not to act as an anchor for this economy, but to fuel volatility further.
Tell us what you really think there, Mohammed. Okay.
Yeah. So on a side note to that, Randy, I don't know if you know this guy, Mohamed El-Erian. He is excellent.
Yeah.
He's a really, really interesting guy to follow. I follow him a lot. And he has been beating this drum for years, really. And his first criticism of the Fed was they were late to act, which was true. And he said, they were late to act, and now they're overreacting because they're concerned about how they were late in the beginning. I'm trying to be neutral on it because to be fair, I would not want to be Jerome Powell, right? I would not want to have to do that. But some of the moves have been very, very head-scratching.
And when you think about what they're headed for this year, I mean, inflation is starting to tick up again. And the way that they have fought inflation is to raise rates. They're right now lowering rates. If they have to raise rates again, what does that do to the confidence of the market? What does that do to the market? What does that do for the overall picture here?
To put it mildly, it would not be good. And the argument you're making is, I think what Mohammed has been, and I've been saying, and everybody else I know has been saying from the beginning, is why are you getting so aggressive with these cuts when if things don't go right, you might have to take them back. And it's going to be so devastating, unstable, whatever word you want to mean to the economy if they have to do that. Because, I think people don't dive far enough into the fact of like interest rates, what's the big deal? Yeah, you use it to control the economy. Really, everything through the economy comes back to interest rates, right? Whether it's borrowing, it's lending, how much margin can banks make on the loans that they're making, how much is it going to cost people if they want to go and buy a new house or a new vehicle or go on a vacation, whatever it might be. It's really the bedrock, and that's where everything starts. That's why it matters so much.
Well, interest rates obviously are affected. The mortgage rates are affected by this rate. So as the rates go up, people tend to pull back and maybe might not want to buy a house at a 7% rate. So we've seen housing sales go down a little bit in the month of January as we get going as well. Our debt as a nation is dependent on that. Right now, we're paying $3 billion a day in interest.
Wow.
So that's a lot. So, we follow baseball teams and football teams and our favorite college team. We don't follow the Fed. And so when we get into retirement, all of a sudden, these things start to become a part of our conversation. So how do you deal with that when you sit down and talk about retirement planning, Jay?
That's exactly right, Randy. I think this gets to a bigger question or a bigger issue though, right? If as you're planning for or you're in retirement and every pivot or misstep or miscalculation or whatever it is that the Fed makes is keeping you up at night and it's going to unwind your retirement, there's probably something missing.
Yeah.
There's probably some planning that hasn't been done, right? There probably isn't a strategy for this because the truth is, we can't control what the Fed does. So we need to take everything that we can control, get that plan together so that whatever actions they make, positive or negative, we can maneuver around that.
Mm-hmm. Yeah, when rates go up, you think about it. When rates go down and you've got a 7% mortgage and it goes down to 4%, what do? You refinance, right? You get a better rate.
Right.
Well, the same thing, if interest rates go up, there are products out there that are going to be favorable for that, and maybe we move that direction. So keeping track of interest rates and keeping track of what they do in the economy and keeping track of what they do in the stock market might not be something that you have done your whole life, but it's certainly something that you're going to have somebody do for you when you're in your retirement years. This is what Jay does. This is the area he lives in. At the beginning of the show, he said, let's talk finance. So you might not be that person, but let's get somebody on your side that does. Here's our number. Here's our website. 210-985-6200 is our number. 210-985-6200. Or our website is retire210.com. And go to the bottom of the page there. There's a form fill there. You can put your name, and there's even a box there. You can say, hey, Jay, I'm interested in talking about the economy. I want to talk about how interest rates. I want to talk about the stock market, how much I'm in there. Just put that in there, and we'll know exactly what you want to talk about. Again, that's retire210.com or 210-985-6200. Okay, so let's talk more about what's going on right now. And we've talked about this over the last year or so, that the Trump Tax Cut and Jobs Act is supposed to come to an end on December 31st of this year. And that has changed the way we have filed taxes. It has changed the tax brackets. It's done a lot. And so now it's going to expire. Congress is now trying to figure out if they want to renew that. So one of the things that has been favorable for us is doing a IRA to Roth conversion, because tax brackets are down. Ed Slott is that guy you see on PBS all the time. And he said, boy, this is an opportunity, a window of opportunity right now that you really got to take advantage of.
Every year you have low tax brackets like we have now. Take advantage of them every year. Don't start slowing down just because you know you may have more years of this. Take advantage of every year you have. And if we keep having low rates, take advantage of Roths while we can get them on sale. Taxes are on sale. Everybody likes a sale. You can get tens of thousands of tax savings now. So think about it like that. If taxes were on sale year after year, take advantage of that.
All right. So we just talked about rates, and now we're talking about rates maybe in our favor here, tax brackets in our favor. We talked about this maybe being the golden age of fixed income. Is this the golden age of an IRA to Roth conversion? Could we say that?
Yeah. The thing that he talked about that I want to hone in on the most here, Randy, is he said, don't squander this time. Take advantage of as much time as you can. And this applies to everything. It applies to investing, it applies to savings, it applies to planning, and it applies to your tax management as well. The best example I have of this is this happens almost on a monthly basis to us in the office. We'll have someone come in, and it's a couple, and they're doing great financially. They're doing fine. They've both got their Social Security coming in. They've both got pensions coming in from a previous employer. And maybe between all that, they're on $10,000 a month. They're like, hey, this is great. But the reason we're here seeing you is because we've just put our 401ks or IRAs off here on autopilot. We haven't been using them because we don't need it. And I just got this notification that there's this thing called an RMD, which is a required minimum distribution. And it's like a 6-figure distribution. And it's killing me tax-wise. I say, what can we do? And I try and say it a bit softer than this, but the bottom line is there's nothing you can do now. Like, we needed to start this 10 years ago. You're 73. We needed to start this when you were 63, when you were 62. We needed to start planning. And that's what he's talking about, is we need to start doing the time side of it right now. And it comes to people as a bit of a shock. But then when they start thinking about it, they're like, of course this was going to happen. Why didn't I realize this? I've got this huge 401k here, and I've deferred the taxes, I've deferred the taxes, I've deferred the taxes. Well, of course the IRS is going to want their cut at some point. And we're probably not going to be able to avoid giving them a cut. Let's give them the smallest cut possible.
Mm-hmm. Yeah, when you think about using your 401k money when you retire, there's probably a time when you're going to want to buy a car. And if it's a $40,000 car and you go dip into your 401k, you're going to have to take $52,000 out of there to get the $40,000. Right. And that's not the position you want to be in. And taking money out and having to pay a toll the entire time you get it is something that you really need to look at. And then the other part of it, what you bring up, you save really well. You got $1 million, $1.5 million in there, and then they divide that up and give you a formula. And then all of a sudden you look, holy cow, look at the tax bill on this. So again, let's not get you into your 70s and late 70s and early 80s and find out you're taking $100,000 out of your 401k and there's a big tax bill associated with it. We can do something about that right now. Give us a call. Give us a look on our website. Maybe that's the discussion with your 401k. Here's our number. Here's our website, 210-985-6200. 210-985-6200 or online, it's retire210.com. Just go to the bottom of the page and you'll see our website there where we have a form fill and you can fill in the information there and we'll reach out to you. All right, I watched some Shark Tank. I've enjoyed that over the years. But now Mark Cuban and Kevin O'Leary and a lot of the people on that dais there are on TV on the financial networks now. So Mark Cuban just came out with some pretty strong words about the stock market. He says the words buy and hold are the most misleading marketing slogan ever. He says it's like lather, rinse, repeat. It's ridiculous. He says it's fine to have a long-term horizon for your money. But the idea that you would just keep packing money in and then 30 years later open up the envelope and go, look at me, is probably not realistic. But he says the stock market is for suckers. Okay. He's probably made a lot of money in the stock market for him to say that. So what do you think? A, buy and hold, and then the other idea that the stock market is for suckers. Tell me what you think about that.
I've got to say, I know hundreds of millionaires that would disagree with him.
Right.
That the stock market is for suckers, right? Because they are millionaires and multimillionaires because of investing. Now, where I think he's got a point, and it's hard to know the point if he's trying to make this point, but I think what he's trying to make is, if you don't have a strategy for your investments, if you're just blindly throwing money at something in the stock market and hoping it's going to work out, then you probably will lose some money. You probably are a bit of a sucker, like he's saying. But having, first of all, a diversified strategy and one that is adaptive to what's going on in the economy, that's the way that you invest. So we've talked about interest rates, in the last several years, we've gone from home loans being, 2% to now 6, 7, 8%.
Yeah.
The environment's changing. The leadership in the stock market, what's been making money, that changes. You need to be active and seeing what's happening so that you can pivot your investments to that as well. If that's the point he's trying to make, couldn't agree with him more. If it's simply that you're a sucker for investing in the stock market and you should buy an NBA team, well, I don't agree with him.
Speaking as the guy who just traded away his best player to the Lakers, right? So,
right.
I mean, Warren Buffett has said for years, he said, if you're going to buy a stock, make sure you're going to hold it for 10 years because that's the way he does things. He buys things for the long term. Now, we don't have Warren Buffett money because if that particular investment goes way down, it doesn't hurt him as much as it would hurt us. But he does have that mindset of buy and hold it because you want to buy quality stocks, and that's going to pay off in the end. So, I mean, those two things are completely contradictory, and who would go against Warren Buffett? I mean, really?
Right. Yeah, and you're right. He's made his, I think he's like in his 90s now, right?
Yes.
But he's made his money through going in, analyzing companies, finding ones that are undervalued, buying them, improving them, and holding them for quite some time. Like if you look at Berkshire Hathaway, that's basically a company that's made up of companies, right? And that's the strategy that he's used, but he's been deliberate about it, right? And if Mark is trying to say, hey, you need to be deliberate about your investments too, otherwise you are going to end up being a sucker, then he's right.
So in a way, if I look at myself saying I started putting money into a 401k when I was in my late 20s, and in a way, I'm a buy and hold person. I've just been putting money in, and then I'm going to get to 65 or 67 or 68 or whatever it happens to be. And now all of a sudden, he's telling me I have to be an active money manager. I'm not an active money manager. I'm a guy who just put money away. That's why I need you, Jay. So there is a change in the paradigm here between putting money away and using the money. And that in itself really does need some attention, doesn't it?
What you're talking about is the shift from work life into retirement. Okay. And on a mental, social, and financial scale, everything is about to do a 180. It really is. Okay? You've gone to work somewhere for 40 plus hours a week for decades, right? You've had a paycheck coming in every 2 weeks or twice a month or however it is that you get paid. Probably people have been diligent like you and they're stocking money away and they've built up their 401k, they've been saving, they've been in growth mode. And now everything is shifting and you don't have that paycheck coming in. So we've got to figure out a way to replace it. You're not going to be building up your savings. You're actually going to be drawing down on it. And you don't have as much time to ride out the volatility in the stock markets like you used to. So we often have the discussion with people like this that are going to retire and they're in their early 60s or mid 60s or whatever it is. And I'll have a conversation very similar with them like I just had with you right now. And I said, hey, when the 2008 economic crisis happened, you must have been like in your mid 40s or something like mid to late 40s, something like that. And they're like, yeah, it's about right. I said, how did you react with that? And they said, well, no one likes to see their 401k go in half. Like, yeah, of course not. I said, but this is what I'm guessing that you did. You're like, this stinks. I don't like seeing my $1 million go to 500,000. However, it's 15, 20 years maybe until I'm going to use this money. Secondly, it's almost an opportunity because I'm going to keep buying into my 401k. I'm going to keep buying in at this low level. If you've got an employer match, that's being bought in at a low level. And you had the time to recover from that, and here we are now. Once you retire, you've lost one of the most important elements of investing, and it's time. So there needs to be a strategy with the finances that you have that how can I kind of recreate a scenario where I've got my guaranteed paycheck coming in, I know I'm going to be okay, and I can take the remaining amount of my wealth and invest it as though I am younger because I've essentially created an environment where I've bought time back for myself.
Interesting way to look at it. Yeah. And I think that there's a lot of us that get to this point in our life and say, I haven't been a money manager all my life. I've just been putting money away. I don't want to be a money manager now. I don't want to do that. I want to go into retirement. I want to go travel. I want to do my thing. I want to, play with my grandchildren. I want to take them on trips. And I don't want to worry about, the stock market at this point in my life. That's why you go to somebody like Jay. Give us a call and we'll sit down and talk through it. Secure Financial Management is online at retire Retire210.com. Retire210.com, or give us a call, 210-985-6200. 210-985-6200. All right, we're not done with Shark Tank here yet, because Kevin O'Leary, Kevin O'Leary is out there doing things too. So just recently, and you and I talked about this, he said you need $5 million to retire. And we just like, really? Here's another one of those numbers. It's crazy.
Wow.
Well, I guess he rethought that and said, you know what? That's probably off base. And he has done a complete 180 on this. He's completely reversed fields. And he said, yes, you can retire on $500,000, but you got to have two things. Number one, you got to have fixed income products that return 5%, and you have to have a balanced portfolio that returns 8 to 9%. Now, I looked at those numbers and I thought, the 5% we talk about all the time, 8 to 9%, that seems a little high. Can you do 8 to 9% without making people feel uncomfortable out on the risk scale with a downside that they don't like?
My bigger question here is, how did he get from 5 million to 500,000? That's what I would like to know. It's a tenth of what he said you needed just recently.
Right.
So that kind of puts everything into question, I think, that's being mentioned. But I mean, I think the point he's trying to make here is that you need something that's going to be stable. You need something that's going to be able to recreate that paycheck that we were just discussing, right? We need something that we know, even if we have a downtime in the market, which guess what? That is going to happen at some point, right? It just is. That even when that happens, we still have all of our basic needs, all of our basic expenses covered, so that that volatility doesn't upend our plans and we have to go back to work. I think that's the point he's trying to make here. And maybe he's coming around to the idea that you and I talk about as well, Randy, which is there is no set number for people, right? Because the truth is, for some people, 500,000 is going to be plenty. For some people, they're going to need multiple millions. It's what is your retirement? What is the retirement that you want to have lived out? That determines everything. And then we need to back that plan into a number, not the other way around.
Yeah, going from 5 million to 500,000, that's somebody shook their finger at him and said, Kevin, you got to get realistic here.
No kidding.
I don't know. But in any event, the idea of replacing that paycheck is what we talk about all the time, whether it's 5 million or 500,000. And there's a lot of people out there that are still going to worry about their money. Most of you will say, I have 500,000, I have $1 million, I have $1.5 million, I have $5 million. But it's amazing how we still worry about running out of money. And the reason we do is because we've walked away from a paycheck, and we need to recreate that. It's Social Security. It's income planning. That's what we do, and that's what Jay can do for you. Give him a call. Give him a look online. Here's our number, 210-985-6200. 210-985-6200. We'll go through the Get Me to Retirement 5-step process. Sit down, get to know you, find out what you've done for retirement. Where have you saved? How is it doing? What happens if we have a financial meltdown? What happens to your money? And if you look at that number and go, I don't like that at all, now we've got some work to do. Give us a call, 210-985-6200 or retire210.com. And you can fill out the information down at the bottom there, and we'll get back to you. That is all the time that we have on Clear Skies Retirement for today. If you want to hear more of this podcast, make sure you hit the follow or subscribe button on your favorite podcast platform. We'll see you next time here on the Clear Skies Retirement Podcast with Jay Kirkwood.
Investment advisory services offered through investment advisory representatives at Secure Financial Management, a registered investment advisor. Exposure to ideas and financial vehicles discussed are not designed nor intended to be applicable to any person's individual circumstances. It should not be considered as investment advice, nor does it constitute a recommendation that anyone engage in or refrain from a particular course of action. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Secure Financial Management is licensed in your state, please contact their office. Secure Financial Management is not affiliated with nor endorsed by the Social Security Administration or any other government agency. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Wholesalers Insurance. Jamin J. Kirkwood, Texas Insurance License number 1421850.